Let's talk about our market construct, and Kunal is here as always. Kunal, hi, morning. Thank God we don't align ourselves so much with the S&P, because look at the kind of volatility that those markets are seeing. Let's start with the CBOE VIX. Such a huge jump coming in. What's that, looking at?
Yes, that's the more critical part for the
Yeah.
the indicators to track. And I think with the rise in VIX, it's a strong indication that the volatility is not here to settle anytime soon. We were looking at 35 plus as a level for CBOE VIX. We went back about the 40-45 plus mark. I think just about last couple of days on Monday, Tuesday, and now I think we've crossed those levels also. So which means that what we're looking out for is a heightened bit of volatility. And look at yesterday's, for example, Dow Jones from 39,000 odd levels, we went down to as much as 37,000 odd mark in just a matter of one trading session. It's almost like a 2,000, 2,500 pointer cut for the Dow. So that's the kind of extent of volatility which could get impacted. And I believe that we are in that regime where the VIX and the volatility would be on the elevated side. So I think as an intraday trader, one has to be a lot more cognizant of the new or the increase in the VIX, as well as that the new volatility which could probably impact the short-term trades.
Yeah, absolutely. Huge amount of volatility. Aditya, hi, good morning. What do we have in store given how the handover from the globe has been and the huge spike in volatility which Kunal was just highlighting? Aditya, you'll have to unmute yourself.
Very good morning to you and to everyone. Absolutely, VIX has risen internationally also and domestically also, and we are seeing wild swings on both the sides. The theme which actually looks good is FMCG, which is a little in tune from all such global market news, and pharma looks good, which has done some consolidation and making an attempt. But FMCG is one pocket which actually looks good, and on the index level, I think one can maintain a sell on rise strategy. It's a range trading kind of a market, wherein at higher levels one can short and on lower levels one can buy, because now the worst is already discounted. 100 plus percentage of tariff news is already discounted, so any positive developments over there could lead to a small spike in the market. So I think worst has been discounted. If market further breaks its low, then I think support levels, that would be a good buying opportunity. Currently Nifty is trading at 20,530. In case Nifty touches range of 22,500, then that would be a good buying opportunity. Although we are seeing 300 points of move up and down every day, so 600 points, 700 points, not a big deal in such a market.
Okay. So, Kunal, what are we staring at? Further shorting the index?
Yeah, I think so. Unwinding of positions. In fact, yesterday's data was very interesting, Nikunj and Aisha, because yesterday there was almost like a 5% drop in the open interest. So when you expect the index to rise, you actually expect the sentiment to be positive. So the mood is that the markets would probably discount all the negative, and then you would start building on long positions. But that was not the scene yesterday. In fact, even for stocks, large cap names, there was a strong unwinding which was happening yesterday, which means that traders are going into light. Now, even with the event out, that 2nd April out, the markets are not going into a full, built up of long positions. And I think that could make the market a lot more, lighter and fragile.